Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So we came in today not really knowing what to expect. Yesterday we tried to break above 1407, no real momentum. Every bear, I think, in the wilderness came out saying we're done, we're at the triple top, we're here, we're there, we're boom, we're bam. P.S. Within the first hour, the lows of the day were in. So I kind of came in relatively flat, a little net short. The thesis for the past few weeks have been hold multiple positions, with a spider hedge around it. And then yesterday, a lot of the things that I was holding got extended. So I said, you know what, let me sell some because they've had a nice run and see what type of commitment we have here. And if you look at the chart of the S&P, I don't think the bears had any power, any control whatsoever. We've talked about this high-level range. First things first, look at the low we put in June. Since then, we've been following, basically this one trend line all the way up. We went below it. This is when, even I got a little net short thinking perhaps that this trend would change, but then that's when the rhetoric out of Monty started to talk about the euro staying together. PS ignited another move, held higher. Then the jobs and whatever it was that ignited this move, got us above this downtrend that's been in place since April, and here we are flagging higher. This might be a monotonous mess up here where there's not a lot of traction in the S&P, but the stock selection game in the stock pickers market right now is unbelievable. Rarely in August are you able to come in and have strategies ready to work, move and groove, trade different stocks, buy stocks in a base, add to them for movement, and then sell them higher and get continuation. People might be having fun at the beach and fun in the mountains and doing whatever they do. Whether they're a big hedge fund guy or whether they're an institution or big traders, whoever they are, that's fine. But if you're in your office, you're having a good time too because there's been a lot of things working. So if you want to talk about Apple first, Apple. I talked about how I sold it yesterday. Here is entry 1, entry 2. This is when I got involved in my swing trade. Added here, was done with the position basically there. Today the stock took a day off. I actually made a little money short it. It was up a little bit. I thought perhaps it can go negative, made some money. Some guys actually even made money as it went below 630.21, yesterday's low. And then it put a low in today at 627.75 and closed off it. Very healthy action. Is today's low the low to buy for what could be a move to new highs? Maybe, but it does seem as if we could get a few more days, to maybe pull into this 8-day moving average. So if you're looking to buy a dip, just don't do it too early. But again, if you want to be long Apple for the long term and you don't have any, buying it down here around 630 versus chasing it up here at 638, you're saving yourself $8. So at this point on the close, I took a little bit just in case, but I'm not going to have a full position unless we go sideways a little bit and then cross back above 634, or if we head back to the 8-day and I see some type of nice, reversal candle like we had right here, into that gap. So for now, needs a little time. Google also sold yesterday. Today pushed through the previous high and then came back below it. Some guys actually, I think like Laz, made some money short there. It went above the highs, stalled out a little bit, showed a little relative weakness. The high was 672.85. Today it reached 674.25. The play, if you wanted to be tactically short from a day trading standpoint, would have been once it traded back below this high, you shorted right here, you put a stop in at the high of the day, about $1.30 as far as your risk, and it wound up going as low as 664. Nice move, $6-7. So at this point, I'd like to see it come in perhaps, to the 660 area or maybe even test, the 8-day. For me, I think I'd like to get involved somewhere around here. But again, I'm not in control of the action. I just want to see how it pans out. And after a nice move like we saw from here to the highs, after your pivot buy at 620, a rest is due. And if you look where we're at, we're right at the year highs, and it's, it takes a little firepower to start getting above year highs and just running. And mid-August might not be the time for that. So a little bit of rest would be very healthy. And I do think that, we're going to see a 7 handle in front of this stock before the end of the year. But today, for the active trader, the action was in Amazon. Another stock that some people didn't like the earnings report. I didn't understand how, it went through the pivot price, but you know what, who am I to, think I know what a stock should do? The action speaks for itself, and Amazon broke above 230, And, it's been hovering for a while. We talk about Amazon, waiting for it. It was a great trade on earnings day. Sperling was all over it when it crossed above this, and then it's taken some nice time to consolidate above the recent breakout. Today it showed relative strength. You take a closer look. I started buying it today. I think right around 235 or 235.75. It wound up, it was a little bit stronger, but it came off the highs. I do think you can get another buy price. It's still not even out of this flag type pattern, so we'll see how it opens, but I'll be a buyer of more of this through 238.14. And if it clears also to, what's this level here? This level here is 238.34, and this is that high of 240.74. So this looks really good, guys. You want a little bit of tactical trading 101, look at this 3-minute chart. So you can see the tier system that we used. First things first, stock woke up right around, let's see, this is when I first tweeted it. This was your wide range bar off the open, right here. Pow! Okay, went above previous resistance and held there. I missed this move. So what did I do? I saw a nice little wedge type pattern. I started buying right around 235, seeing commitment to this igniting move off the open. It was a little choppy, wasn't great. I wound up going to the gym. I had to take also care of a meeting, and then while I was out, I said I'm going to put my stop in at 234.70. Why did I want to do that? Because I said, what? It was as high as 236 and change. If it were to break below 235.11, the trade pretty much changes if it doesn't hold this breakout. And this breakout was 235, so it was right here. I probably should have put it a little bit lower, but I got lucky that it didn't get stopped out. So anyway, we stayed in the position. It held. And then it started to go again. And now, to me, what you should be doing is you should be writing down the high of the of the day, because that's your new entry if you're not in it, or your add entry for the afternoon. So now it's going sideways, boom. Here's your buy for tier 2 if you were in tier 1, and then it flagged again. You could have even added right here, into maybe a tier 3. And then on the run, you sell some. Get back down to maybe a tier 1, the tier 1 that you bought right around here. So now you're holding tier 1 from 235 all the way to 237, $2. You're adding here for cash flow, you're adding there for cash flow. Then it went as high as 238 almost. So again, another nice little pattern, another nice little flag pattern right here intraday. If you sold into this strength and said I'm in tier 1 now, you let it go sideways and you bought back here, then you sell it in front of 238. So now you've traded it 3 times and you're still holding your tier 1 all the way from here. So then PS, end of the day, came off a little bit, big deal. Some guys don't hold things overnight. And overall, you had some nice tactical tier system trading in here intraday, and then you take whatever you feel comfortable taking overnight because this daily chart still looks really good. Guys in Target making money at highs. Walmart looks fine. It's got earnings tomorrow. Nice flag type pattern. If you don't take stocks into earnings, fine. If you've been holding it since the breakout point, hopefully you're only in tier 1. Tier 1 into earnings is my rule. If you're in more than that, make sure you have some type of hedge. Costco, what's that doing? Still hanging out, still looks good, flagging, looks like it's ready to break above. There's a lot of good stocks going on here, a lot of nice action. Home Depot gave you another day after its earnings. Look at the run this has had since it was, my retail stock of the year 2 years ago. And if you held on, look at the type of move you've had besides Walmart being this year. Cisco came out after the close. It was, pretty much in line. I'm not sure how much traction you're going to get, but I think it's enough that it's going to hold it up here. It's had a nice move from 15. They beat by a penny. They beat a little bit on revenues. They raised their dividend. Here is the price to trade it against, $17.80 above the 200-day. It probably stays in the game. Some guys were talking about SanDisk, trying to break out again. This could be on the radar for tomorrow. Nice little upper flag here. Came out with earnings, had a nice gap, couldn't fill it, could get some continuation. I can't Sprint. I'm sorry, guys. I had it and I sold it too early. I think I had it right in here, and then I sold it right around here. And now look at it, but whatever is what it is. And really, the banks, not much traction. Broke out, failed yesterday, got out of it, still hanging around. It's doing what the banks do, which is, hard, very frustrating on strength. And really, that's it. I got to get going. My dad's in town from Florida. Going to go have some steaks and wine and celebrate the Ironman finish. But anyway, a lot to like in the month of August, and I know you don't have to be all in, you don't have to be, a perma bull, because I'm far from it, but let the market keep proving itself, keep rotating with using a tier system among stocks on the move, stay with stocks you like. If you're holding positions, make sure to have a hedge. The VIX is low, so if you have a big portfolio and you want to buy some protection, even though it might go to waste, it's always good to have some kind of insurance before a storm, because if a storm does hit, it gets very expensive to grab that. And just stick with trends, and stop being enamored by headlines, and stop being scared out of equities, because those with a long-term equity plan, I think you're going to make money. Those trading intermediate trends like what we do and we specialize in, there's ways to do it. It's tactical, it's methodical, it's very risk averse. I'm probably one of the most risk averse guys out there. I use stops. I probably sell too early. So people say active trading is gambling, and I think it's, to not active trade is gambling, by just letting the market take your stocks wherever they're going to go. And then you have your intraday, and then you also have your macro. There are ways to pick winning stocks. There are mega cap vehicles that are at new highs that have multi-year moves, that if you pick them out the right way, you could be making money. And there's a lot to like. Scott Riley, T3 Live, the recap. See you at the morning call. Have a good night.